Good morning, everyone. Wild ride today. Hope you can hear me okay. And I thought I'd show you the reasons of why we came in massively short. If you're in the essentials room, what did I warn everybody? Oh, rebalancing. Nobody wants to believe me on this stuff. So you have the rebalancing, and I'll go over that also, and also about combining it with charts. So I just can't stress that enough. So let's just go into it so you know what I'm talking about. So there's a bonds and stocks don't always matter. They don't always go together, but I want to go over the theories of why we were short, and I want to go over some of the misnomers, the things that don't work, and I don't know why everybody does it. So I'll start with ones that don't work. So the one that drives me up the wall is everybody watching the dollar. I mean, holy cow, what has the dollar done for the last month? It's gone straight up. What has the SPX done? It's gone straight up. I wouldn't even look at the dollar. I don't even have the dollar on my watch list. I would use charts, and there are times when the bonds matter. So a lot of people ask, well, didn't you use the bonds for the last 44 years? And when you're on the floor, at times, every day it changes. So the conditions change. That's what I'm here for. And I think I'm pretty good at of finding what traders are keen off of. So what were they keen off of yesterday? Well, number one, it's this bond stock relationship. So let me, I can't copy and paste this, but this is where we were shorting, by the way, in the S&P. Yeah, that was a good one. That's only 100 points. Bear flag is a bear flag. Just keep that in mind. But I thought I'd show you this. So this is what happens with a rebalance. So 50-50 funds rebalance the end of every month. The end of every month. So, and I'll show you at least 3 reasons why we were bearish. At least 3 reasons. So number one, rebalance. So 50-50, not the S&P. The S&P rebalances the last day of the third Friday of the month every quarter. But 50-50 funds rebalance like yesterday and today. They start a little early. This is October 1st in the bond market. This is October 1st in the stock market. So the whole idea in here that a lot of people miss is this means that funds are long up the wazoo stocks relative to bonds. That does not mean the bond market has to go up. The bond market's gigantic. They can be in 8 million different maturities, but it means the stock market's probably going down. So that's your first. I like to have 3 reasons. So let me give you one. Here you go. So that's your first reason. That's your number one reason. Number one reason. That's why the ESs are still on the low. So just keep that in mind. Here's another reason. You know, like I like 3 reasons. Another misnomer is using this stupid 20 moving average or 21 exponential as your support. Just keep in mind, on the way down, forget about moving averages. I have no idea why you use them. On the way up, if you want to use them, fine. If that makes you happy. I would use a ATR trailing stop, but we only use a 20 in relation to other indexes. So when this got under here and then got under here, then to us at the minimum, the S&P was going to go to the 20. Was going to go to the 20, which is what it did. Then you have this. So you have the one reason, the rebalance. The other is you have other indexes starting to fall apart first. I'm going to erase this. So you have the 20 moving average. Yeah, how did that work in support? It works like dirt. Just keep that in mind. And you have the 50 moving average. Now on the right, you have the Dow Jones under the 20, under the 50. What's that mean to me? It means if this gets to the 50, this is more likely to go to the 50. Just keep that in the back of your mind. Those things do work. How about Japan? Yeah, under the 20, under the 50, to the 50. So what was the one that was above the 50 the most? The lovely NASDAQ, and I think it can still go lower. Yesterday, I said the NASDAQ could go down 400. It's down 400. So you have the rebalancing, you have that the bond market refuses to rally, and you have these moving average correlations. So just keep that in the back of your mind. I think these are a huge deal, but I'll give you some others. So why has the markets been going up lately? They've been going up lately because people think that Trump's going to win. Now, I'm not saying he is or not. I don't really care of how, I just care on how it affects the market. I'm not going to get in here and get into any politics other than how it can affect things. And I'll show you what we're talking about. So when this narrowed, right here, when it narrowed, see the narrow 48, 48? So when this narrowed, the solars went down, the bonds went down because a lot of people perceive that Trump's going to have more deficit spending. Not saying that's what's going to happen. That's what traders are perceiving. So you had China go down, you had bonds go down, you had the solars go down. So just keep that in mind. So, and the stock market go up. Well, this is where you need to use other tells. So give me 1 second. Here's another tell for you. The S&P. So we're talking about this. But yesterday, the S&P was up here. So people are thinking that the markets were going up because of Trump. Well, then you got to watch the Truth Social. And I'm not sure you can hear me. The internet went out. So please let me know if you can hear me. So, and see my screens. Great. So the whole idea in here is Trump media. So you'll see the correlation. 4-hour chart. I'm going to take off the arrows. Stock market going up. Dow Jones, DJT going up. DJT getting nailed yesterday, and the possibility of a rebalance and the moving averages. Try to have 3 reasons to do something. So this went down. This went down. Just keep that in the back of your mind. This went down. That went down. And what went up yesterday? Well, if Trump winning will hurt the solars, then DJT going down, guess what went up? Bless its heart. First Solar. This got nailed on the right. First Solar went straight up. We're long First Solar from the bottom. And by the way, talking about bottom, I just told you, moving averages, I just don't get it using it as support. On the way down, the only thing to use, keep in mind, you have other people on here that have been doing this a year. I've been doing it 44 years. On the way down, the thing that matters is price support. The more touches, the more important. If you try to screw around with moving averages as support, you get yourself killed. There's your support. It's a zone. It's not an exact price. On the way down, use price. There's your price. So if on the right, the NASDAQ is plowed through that, then it's more likely that this is going to plow through it. On the other hand, this is here. To me, that's like this going to here. That little coagulation on October 3rd. Right there. October 3rd, October 3rd. So on the way down, fine. On the way up, if you want to use other things, bless your heart. That's fine if it makes you happy. But I'm just saying on the way down, use price support. It becomes animal spirits. So you had the moving averages. You had rebalance stuff. And guess what? The bonds still haven't rallied. why on earth should the broad market rally? It shouldn't. So just keep that in mind. And now, why should it rally? You got Apple coming out. So just keep that in mind in there. That's what we're watching. I'm still in First Solar. So now another thing that's happened. Now, I don't know how it's acting today. I'm dying to see. Yeah, XBI holding up. Why is XBI holding up? Because DJT is going down. Because traders are perceiving that the Trump administration doesn't like vaccine stuff. So XBI held up better than the rest of the market. But keep in mind, we're short. So we're short the SPX. So just keep that in mind. We're long bonds just with a couple of calls. So just keep in mind how we're doing these things. And so far, so good. That's all I know. So far, so good. And we're going to keep that going. As long as it works, we're going to keep it going. So in here. Now, I want to show you a couple of other misnomers. I showed you about bonds. I showed you about moving average. One of the ones that to me is the biggest pet peeve I have is buying on the way down. If you want to be in this business a long time, you don't buy on the way down. You buy on the way up. Let me give you, for instance, like this, Microsoft. Yeah, you might have gotten bailed out and lucky, but guess what? You're occupying a tremendous amount of capital with the hope stage. How about First Solar? Do you buy on the way down? No. When did we buy First Solar? We bought after the first sell-off and then the bull flag. Right there. Right there. Do you buy on the way down? Hell no. You buy when it breaks that trend line on the upside. That way you're using your money effectively. So the whole idea is wait. You know, how many people are trying to buy on the way down today? Why? You don't have any kind of inverse head and shoulders. I don't see anything that shows you should buy. Now, bonds. Yeah, and the kind of rebalance, you better see it break this to the upside. If it doesn't, yeah, I'll probably just get out and take a loss. It still doesn't look great here. Look better here. We were long here. But I'll tell you, one of the biggest misnomers is buying on the way down. So I understand about demand zones and all that crap, but I also understand demand zones and then a reversal and a consolidation. I just can't stress how important that is. So just keep that in mind in there. Keep that in mind. That's what I'm doing. So at the moment, what are we doing? Well, we're stubbornly long a couple of bond calls, even though we don't have 3 reasons. We're short the ES. That's a good one. So, and we have a couple of small stocks that I don't have enough reasons. But that's because I'm short a lot of other things. And that's what we're in. Now, where could the markets go? Well, number one, you still have a rebalance. I mean, in the grand scheme of things, the S&P, well, I'll show you on the right. Just keep in mind where the S&P is. It's right here. But the bonds are all the way down here. So just keep in mind the S&P is still up for the month, while the bond market is down about 7%. So just keep that in mind. It doesn't mean I have to be blindly short, but let me just ask you, how many people didn't listen to this, thought that stocks would get marked up on the close, which I warned you they wouldn't, and said, oh, this historically is a strong time of year. So you got to combine other things. Do I think after today it becomes a big deal? No. I think after the election, maybe. So just keep that in mind in here when you look at the grand scheme of things. I know they're like, oh, 87% of the time the markets have gone up on October 29th. Well, I made a ton of money October 29th being short in 87 and in late October in 89. So there's a time and a place to play these suckers. Just keep that in mind. There's a time and a place to play these suckers on the upside. And I'll show you. So let's just take last year. We're going to take a different kind of situation. So I'll show you. So here's the bond market last year. Remember, this is diverged negatively. Now we're going to take last year. What happened? The bond market was going straight up while the stock market had a mind of its own on the way down. Look at that. So when you go to this, what day was that? That was October 20th that the bond stopped going down. When did the markets really take off? October 30th. Yeah, you start to get positive divergence. So there's a time and a place to play this. Now you might be like, oh, that's only 1 year. Let's go to the year before. When did the bond market go up? November 1st, this area. Stock market, of course, I'm sure went up then. Let's see. Yeah, it went up. But like I said, you know, it's all about stabilization. So see how the bond stabilized right in here? They stabilized. They stopped going down. So just keep that in mind in here. Also, keep in mind something else. See this twerk down? That's October 14th. Keep in mind here, the bonds were already rallying. So I'm just telling you, I totally understand about the end of the year stuff, but you really need participation from the bond market. So I just can't stress that enough. So that's what we're doing right now. So now, where could the market go today? So let's go and look. Well, number one, like I said, the bond market's no bargain on the upside. That's for sure. There. That's what we're watching. TLT. We're long TLT calls. Not many, because I don't have 3 reasons. Over this, I'm going to get a lot more excited. But that's a 5-minute. So I'm going to unhinge this. And Jack, and Ginu, thanks for being in the Essentials room. How is our track record doing in the Chart Patterns Mastery? Yeah, thank you. So good. Yeah, it's been very exciting. And by the way, in the Essentials room and also in the YouTube Live, don't think all I do is short. We've made some good money on the long side, especially First Solar. In fact, First Solar's up today. You know, it's rallied about 13 points on the low yesterday. But getting back to it, I want to show you this. Here's the hourly chart of the bond market. You see on how it held. This is the 20-year bond ETF. It's held. Barely, but it is held. If you're going to buy bonds, you want to look for that reversal pattern in this area. That's why we're long bonds. It's not perfect, but at least it stopped its support. So that's what we're in. We're in that. And also, don't get me wrong about something. Number one, so we're in bonds. Number two, where could the ES go? Now, I know you could say, oh, the ES looks terrible. Well, of course it looks terrible. That's not the point. The point is where's support? Support, so at the arrow I showed you, right there, that zone. In fact, we can zero in and show you that zone better. Right here. We can just draw it over here. And just keep in mind, how does the 20 work? No, bad. Yeah, you'd probably be gone from the business if that's all you used. Now, on the way up, if you want to use that as your stop, that's fine. I'm talking about on the way down, animal spirits. They care about support. They care about price support. So you see, there's your support zone right there. Now you might say, how about here? Well, that's why the whole market's holding. That's support too, prior tops. That whole area is support. So that's why we did spread slightly under the market here for today, betting that that holds. So now, is this going to hold? Well, now you got another wild card. Here's a close-up for you. Support zones. Like I said, I can't share this. I wish I could on the YouTube Live. There's your support zone. Let me copy and paste that for you. Yeah, thanks, Genu. So you see that right there. Now, the next thing, though, and this is another big kahuna. Number one, you need the bonds to rally. They're slightly rallying. But number two, if Apple has bad earnings and Amazon has bad earnings, now, why would I say that? I'm not always bearish whatsoever. I'm talking about there's so many things lining up. But go and check out the S&P again on a daily chart. Remember that 50 moving average? Now go on the right. $50 moving average. On the right, the NASDAQ. Not at the 50. Right here. October 3rd. October 3rd. So just keep in mind that if this goes to the 50, down another 200, then this is more likely to go to here or undercut it. So just keep that in mind. Keep in mind that 50 moving average right here. That's what we've been banking on, that 50 moving average. So let me show you a couple of other things. So you got that. You see what we're talking about, the 50 moving average. So by the way, chart patterns mastery, that butterfly we bought it at $1.39. We got to look at where to get out. So we're in this one. You know, I'm not going to put the cart before the horse. We're in this one. $1.92. I'm not out yet. I'm not getting out yet. So we're in that one for $1.39. It's not $1.54. It's almost $2. So right now you're up, almost 50%. I'm not getting out yet. Just to let you know, not getting out yet. So I'm going to give it a little more time. So that's where I am when it comes to that. But I'm telling you, if that NASDAQ gets to the 50, then this will probably get pulled to there. Now, when I'm showing this, I also want to show the non-24 hour. Non-24 hour. There's your 50. There's your 50. Just keep that in mind. This shows you price support even better. So we're going to go and make this nice and big. Like I said, if you use a 20, you're probably out of the business. On the way down, don't use the moving averages. Use price support. Do you see the prior bottoms and the prior tops? There's your price support. Just take the prior bottoms, the prior tops. Price support. We can put this on a 4-hour. There. Prior bottoms, prior tops. Maybe make it a little wider right there. And this, you might say, isn't a little lower than that. Well, it's a zone. Anybody that tells you it's an exact price, mute them. There. There's your price support. Support zone. Here's your bear flag. Genu, I know you nailed that bear flag. So there's your support zone. I'm actually going to label it for you. Now, keep in mind, once it gets here, you're going to have every perma bear say, you see, well, guess what? They've been short since 5,300. I wouldn't listen to them. One of the keys in this business is to utilize your capital wisely. So if you only have 5,000 to trade with, you want that 5,000 to work today. You don't want it to take 6 weeks. There's your support zone. There. Like I said, I wish I could share this in the YouTube live, but I can't. I try to go to copy and paste. It doesn't work. Let me see if it goes well, but you see the support zone. So let's go put it with the NASDAQ, the non-24 hour, the NDX. So where's that support zone? That's a little more sloppy. This is a 4 hour, not a daily. This is an area of support, I guess. There. Now, I will tell you something that's good news. That's good news. Number one, you have this end of the month rebalancing. And keep in mind, a lot of people aren't sticking their neck out buying bonds because tomorrow's the unemployment report. And you don't have a lot of people sticking their neck out buying stocks because of the election. But I'll give you something that might work later. Later, not now. And that's this. Buybacks. So Apple can start buying back stock tomorrow. Microsoft today, Meta today. And I'm just telling you, maybe that'll help later. So I'll show you another graphic that I love. So here's Apple. So companies voluntarily don't buy back stock 5 weeks prior to earnings. Most big companies. What are you noticing about Apple? What you're noticing is almost every earnings, it goes up after earnings. Almost every single one. Sold off, rallied. Sold off, rallied. Not everyone. I mean, this one didn't. But almost every one, if you go back probably the last 10 quarters, let's actually do it. And I bet you almost every one the stocks rallied. Not everyone, but let's just do it. One, two, three. And I'm not saying exactly like every single one. Well, that one didn't. This one, it took a week. So this one worked. That one worked. That one didn't work that great. It did. Sorry, it worked a little. Worked, didn't work, worked. So probably 8 out of 10. So that's about the only thing going for the markets. Now, chart patterns mastery, how is TLT doing on a 1 minute chart? Is it coming back? Sure is. So when do you get excited? Well, I'm always excited about the market, but really you get excited not with moving averages. I'll get excited on two things. I'll get excited if a 15-minute reclaims the ATR trailing stop. Now, when we talk about a stock turning, we need it to turn on some metric. We can leave it 20 up here, ultra short term. At least it's over something. When do I get really excited? I get excited if it gets over 92.30. So right now we're actually up in our calls. Just to let you know, chart patterns mastery. Shock of shocks. So give me 1 second. Right, I'm back. So I had to go for a second. So chart patterns mastery, couple of things. Little housekeeping. I think we take our almost 50% and not screw around with it. Just to let you know. So let me go and post that in chart patterns mastery. Number two, I did not touch the Russell, but at least the Russell is trying to turn the corner. So you see the bond market on a 15, what's developing. So it stopped at support and it's trying to develop a bull flag. That's why we're in TLT. All right, let's go and look at the Russell. Nah, that's too sloppy. That's why chart patterns master, I talked about buying the bonds, not the Russell. I can't believe we're actually up in that. Just keep in mind, that's a 15-minute chart. I would also use a MACD. 5-minute chart. We're getting there. So then you're like, well, where is resistance? And let me just tell you, when you look at this, when I talk about it has to get over something, it's got to get over a 1 minute or a 2 minute or something. Just don't buy it on the way down. Let it get over something. So chart patterns mastery, believe it or not, we're up in the bond market. So just keep that in mind. All right, next one, XSP, what do we do? Let's go and let's look. All right, we're in this. So we're in this for today. So on the one hand, you still have rebalancing. The thing we're in is $2.80 in the money. So let me just show you. So we're in this one. There, $1.88. I'm not getting out yet. I'm going to try to stay in longer. But this is money management. If you bought it at $1.39 like a lot of us did, and you sell it at $1.89, so you make 40%. And the reason we're doing this, you could do the SPX, but I might buy a 4 lot. I have a habit of staying in longer, and then you sell half and all that stuff. But if you made that, you can always then roll into something narrower with your profits. So you take your 50 cents and then you go and buy something like this for 50 cents. There. Now you're playing with house money. If it explodes, you're thrilled you got out of the other. Just keep that in mind. You're thrilled you got out of the other. So in chart patterns mastery, TLT, is it over the 25 level? Yes, it is. So, and this is another thing. When you're trying to value options, go on the puts and add it to the intrinsic. But for some reason, it's not doing that. But we're long them at $1.25. They were $1.05. So that stunk. Now where it's up. Just keep in mind the TLT, that's the 20-year, is actually up for the day. So where do you get out? Where do you get out of TLT? Where do you take some profits? Well, if I'm right, number one, I think we take the profit in the XSP. So let me go and do that. Now, I've already missed it. Gabbing here. Let me go and do it. I'm trying to sell it at $1.80, just to let you know. $1.80. Taking a good profit still. Not what we had, but trying to take it. There we go. All right, so chart patterns master. I got to go and post that in there because we're going to do something else real quick. Let me go and log into Chart Patterns Mastery. So we sold that at $1.80. So what am I going to do? Well, you made 41 cents, not what I was wanting to make. But now I'm going to roll into this. I'm going to go into the 71, a narrower one, taking our house money. I don't want to pay $1. I'm worried about a good rally. So I do this. I do a 74, 72, 70. There. That's what I'm doing. And I'm going to try it for 49 cents. So this is taking your house money. That's the fun way to do it. Not filled, but that's what I'm trying to do. So that's what I'm trying to do. Now let's see how close I am to getting filled. Not close. All right, Chart Patterns Master, I rolled into this one. Rolled into this one. It's on the site. There, just so you know what I did. So now we have that. Now the next one, Chart Patterns Mastery. Do we get out of the bonds prior to the unemployment report tomorrow? Now I'm telling you, if I'm a hedge fund manager, I'm probably not buying bonds till tomorrow because I don't want to screw around with this, but they are up. I mean, we're doing fine. Does everybody see the turn? So you had this. Number one, you had the hourly holding support. Number two, you had the 5 minute. Well, the 1 minute turning. There's your little bull flag. That happened right when I was on. Like I told you, I was getting excited about it. How about the 5 minute? Yeah, now where's the resistance? The resistance is right here. If it gets just prior tops, if it gets over that, it goes to here. So Chart Patterns Mastery, I would sell a third right now at $1.50. You know, take your 20% if you can get it. It's going to stick here. So I don't know if you're going to get it. But so I hope all these are making sense. Hope they're all making sense in here. Like I said, it's probably going to stop right here. So when it gets to resistance, I try to sell some, maybe a third. And heck, if I'm wrong and it goes higher, I feel like a genius that I stayed in 2/3. I got to try to sell it at $1.40, $1.45. I got to take a profit on one. Like I said, let it, I missed it. Yeah, it stopped right at resistance. I'm telling you, 8 million people make it 10 times harder than it has to be. Prior tops or resistance. I'm using moving averages as initiation, trying to stay on the correct side of the market, not blindly as support or resistance. Prior tops, resistance. I'm mis-selling them. So I hope that makes sense. So chart patterns mastery, now we're in a different XSP. And also chart patterns mastery. I tried to buy more calls in First Solar. So the lower Dow Jones DJT goes, Trump Entertainment, the higher First Solar is going to go. So just keep that in the back of your mind. And like I said, that's not my opinion of what I think about anything other than that's what traders appear to be keen off of. So what else is going on? The lower DJT goes today, it seems to be affecting the TLT. So like I said, that's one of my strengths is finding what is correlating today. And what's correlating today is DJT. Just keep that in mind. So now you're going to get something we call a Stewie pattern. So a Stewie pattern is an inverse head and shoulders. So a lot of times what happens is a stock rallies, then it gets too overbought, and it has to form like this, like a W, maybe a Stewie, a rectangle. So what's happening right now on a 15-minute chart, this is probably going to get overbought. I don't know about you, but I think this looks pretty good. So I'm just going to stay in until proven otherwise. In fact, I might just cancel my offer for now. So just to let you know, might cancel my offer. Too late. I just sold one. So let me just put that in there. So chart patterns master, I think I'm off the hook with buying these calls. Now I should have bought more on the way up, but at least we got out of one and we're ahead on them. And it's money management. Remember, the commission is per contract. It used to be per ticket. So you don't have to sell them all. So money management is a big deal. Like I said, we rolled into a different XSP, and we have other ones anyway. And the reason I'm being quiet, I'm still scanning for everybody. I'm structuring trades for everybody. So it's not like I'm shopping on Amazon. All right, Chart Patterns Master, here's another winner for you. So just to let you know, Essentials Room. So just to let you know, we bought this yesterday at $4.21. So Chart Patterns Mastery, I just sold this. Only half. But boy, you got to take that kind of money overnight. So let me go and post that in here. There. So TLT, remember that line? I just can't stress enough. When you see it stop at support, like you do, and then you see a possible bull flag, the initiation is the key. Do you see the initiation? Now you might say, well, how about here? Sure, you could have bought it there. It tested the low. You were fine. So right now, Chart Patterns Mastery, you're up about 20% in those. I kept 2/3. And by the way, another thing we do a lot. So are the markets near support? Well, yeah, they're not there yet, but they're close. Remember that support? So how about the Russell? Let's put the rut. Where's support? You're at support. So what do you do then? You look for stocks that might still look good, that have retained a bullish structure even in this sell-off. So we bought ALT back here on the bull flag. We sold it here at resistance. We're not back in it. I'm thinking of getting back in. Most of the small ones we saw, if the whole market falls apart, they're less likely to break up. But some of them are starting to come back, and we stayed in them. So we're still in ABSI. We're still in LUNR. Gino, I hope you saw that I got back in. So we're still in DCTH, which still is retaining a bullish structure. So we're still in those. Yeah, I hope you saw that. You know, I have no pride about selling something at 60 cents and buying it back at 60 cents after I broadcasted it. So now, do not write off another thing. Forget about, let's see. There you go. Bull flag. Right there. Now, I didn't do it because I did the bonds. I could have done both. Could have double fisted it. But let me just show you what an inverse head and shoulders looks like. Number one, you saw is called correctly TLT. So TLT now, where could it go? It's stuck at that 943 level. Right there. It's got to get over that. Probably overbought. The key is how it works off this overbought. Does it work it off by going to the zero line and this forms a bull flag? All right. Number two, this is the ES on a 1 minute chart. That is an inverse head and shoulders. Do you buy on the way down? No. Do you buy at a moving average? No. You buy on this. That's a Stewie pattern. Do you see on how if you highlight it and you've had mimosas for lunch, it looks like Stewie from Family Guy. But that's an inverse head and shoulders. So you see where it turned the corner. So number one, it broke the ATR trailing stop. Number two, the bond market held. The break is the key. You're not going to buy the bottom. You want to buy the direction. So, hope this makes sense for you. So as you saw, we rolled out of things. Out of things. Just keep that in mind. And you might be pissed off we didn't buy IWM. Well, we're already in IWM stocks, but there's your bull flag and then across to the ATR trailing stop. I'm telling you, use that ATR trailing stop. When do I use a 20? I use a 20 if I'm short. Just show you. If I'm short on the way down, a lot of times if it goes down too fast, the average true range widens. So you got to use some other indicator. But in this time, they jived. They showed together. So that would be my stop. When you see that bull flag, you better cover your shorts. So just keep that in mind. And definitely when the markets are getting toasted, but the thing that made them go down was the bond market, which is coming back. Then you look for the stocks you like if they got to support. Lunar got to support. How about Delcath? Got to support. Now that still could go here, but it had it already pre-announced earnings. So just keep in mind that when the market stabilize, sometimes these stocks go up first, sort of a running start. So that's what I'm doing in here. Now, I'm not that bearish on the Russell whatsoever. It hits support. When it hits support, that's when you look for the reversal pattern. So that's what I'm doing. So I hope all this is enlightening to you. And, you know, this is what we're doing day in and day out to make money. Like I said, the key in this business is number one, not to lose a lot when you're wrong. Number two is to look for this setup I showed you right when it was developing. You don't want to buy on the way down. Heck, it could go down to here and it could take you days. You want to find this, a bull flag in a bull flag. That's a beautiful thing. So the key is proper initiation. I just can't stress that enough. Because keep in mind, if you buy something at incorrect initiation, I'll show you a perfect example. Here is Microsoft versus Reddit. Here is Reddit on a daily chart. So let's say you bought Microsoft because you wanted to buy on the way down. So what happened? You're in the praying stage. You're in the hope stage. You're buying in here. You're buying in here. While that money could have been used to buy something that was breaking up like TG did. So it's proper initiation. This might work. You can be in the hope stage, but maybe it works. But the point is your capital is deployed incorrectly. So just keep that in mind. So take care. Hope you've liked this. And I will talk to you later. I'll talk to you next week.